In today's Trader Tip, I want to focus on the expectations within the bond market and how that influences the Fed. Now, one great tool is the CME FedWatch tool to look, and it puts out a probability of what the Fed will do in the meetings coming up over the course of the next, say, 4 or 5 months. And basically gives you a percentage of how the market's pricing based on the Fed funds, the expectations of what the Fed will be pricing in when they get to those meetings. And certainly recently, the Fed has been trying to indicate that they may or may not move or disguise their hand somewhat, yet the CME FedWatch tool has been very accurate in predicting what the Fed was going to do. In the last 2 meetings, the Fed has moved as the market had predicted several months prior. So I think when you're looking at the interest rate markets, when you're looking at how the Fed is positioned moving forward, and even if the Fed is trying to hedge their bets maybe, ultimately, take a look at these tools like the CME FedWatch indicator. It gives you a great valuation point when you look at the percentage standpoint of how the market's pricing in the possibility of those cuts. And again, it's very fluid, so it moves intraday, so it's something that can be tracked on an intraday basis and over the course of several weeks to see the general trends within the Fed funds and its predictive and analytical ability on pricing in what the Fed is going to be doing in the future as far as Fed announcements.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.